that was kind of what forced me down that path because I think when you and I kind of interacting, I was still in the headspace of like, yeah, this is great. I'm learning how to analyze deals, underwrite properties. My biggest problem was I was never able to like kiss the bus of brokers and get the deals, right? Which is fine, right? I was just a
Yeah.
passive investor, just
Hmm.
looking at,
Hmm.
deals that were being done.
Guy, like, how did you find your role? What is it you're doing, and what was that journey like to get there?
Well, part of it is like not wasting my time eating with brokers, right? If that's not my thing.
Hmm.
There are three things in this business that you have to do to be a general partner, which is operate the deal, find the deal, or find the money.
Welcome to the Stephen Lee Thomas Show, where we provide expert advice for real estate entrepreneurs. And I'm your host, Stephen Lee Thomas. And it wasn't that long ago that I was navigating the challenges of real estate investing, learning from my mistakes, and building the business I have today. I created the show to give you simple, actionable, step-by-step strategies to help you do the same. Each week, we bring you in-depth discussions with industry leaders and professionals who share their knowledge and practical tips. So sit back, take notes, and let's dive into today's episode. Welcome to the show. I'm your host, Stephen Lee Thomas, and today, my guest has accomplished quite a bit over the last, what, 8 years, Lane, and you have acquired, actually looks like you have $2.8 billion of assets under management. That's 10,000 total units, and you're a two-time best-selling author, which I think is pretty impressive. So Lane, thank you for taking time out of your busy schedule and sitting down and joining me today.
Yeah, thanks for having me. Good to see you again. It's been a while, right?
Yes, it's been a while. So for those of you that don't know Lane, he resides in Hawaii on the island of Honolulu, and he's been doing this for a while. And Lane, when you and I first had our first conversation was probably back in, we were talking about this before the show, maybe in 2018. You were still working a full-time job at that point, right?
Yeah, yeah. So like some context, I started to invest in rentals 2009, and then 2015, I had 11 of these little rental properties scattered throughout the country. And then I started to explore these other, these accredited investor groups. Prior to that, I was just a broke guy in my 20s.
So you actually
And
started in Seattle, is that right?
yeah, that's where I was working out for a while. But then that was only my first few units, and I started to buy properties in Birmingham, Atlanta, Indianapolis.
Okay. All right. And so you started there, you were working an engineering career, 9 to 5 job, right? And something sparked inside of you that said, I'd like to go into real estate. I'd like to get into other types of investment. What was that process like for you?
Yeah, I mean that happened pretty quickly. Like this is 2010. I was like, I got a renter to rent out my place. I didn't really know anything about rent to value ratios or how to be a landlord. I just got a property manager. And it was a different time back then, right? Things were a lot cheaper. And for a kid in his early 20s, I was like, wow, there's a lot of beer money I'm making here. And I was like, well, if I just keep doing this a bunch more times, I'll be able to quit this crummy engineering job that I didn't particularly fond of at the time. And I saw the light at the end of the tunnel. I was like, this is not to get rich quick kind of a theme, but if I bought, you know, a few properties and then it would get quicker, then I get a
Hmm.
dozen, I was like, this is the fast pass out of this W-2 401k grind.
And so that was, you were doing single family homes at that point, right?
Yeah, a lot of turnkey. And a lot of this was like just buy and hold and pray strategy.
Okay. So
Slap a 30-year
turnkey, tell me a
mortgage.
little bit more about turnkey. I think I've heard some about that where that's, and I'll tell you my version of what I've heard is maybe in, I'm gonna say uh the southeast, like Georgia or Atlanta, maybe Tennessee, there's single family homes that I can buy from here that are ready to go turnkey. Is that what you're talking about?
Yeah, I mean it's kind of sold as a little bit of a lie, right? Like supposedly in the land of unicorns and rainbows, there's these like benevolent house flippers that pick up a property for $40,000. They put about 20 grand of rehab into it, and then they sell it to you for 80 to $100,000, and they make some money, and you get like a perfect rental property that's turnkey that is going to get you champagne wishes and caviar dreams, and you can just buy a bunch of these things. And oh, by the way, their professional property management that comes along with them is going to do everything for you,
Hmm.
right? But it did somewhat. When I got to 11 rentals in 2016, I had maybe an eviction or two every year, some kind of big catastrophe every quarter, and it just wasn't quite scalable. I mean, it had professional property management, but you get to a point, double-digit rentals, it becomes certainly a headache managing the manager. And all that, with a few $100s of cash flow per property after all expenses, maybe a few grand a month. Most of my clients and myself at the time, need 10, $20,000 a month. So you got to multiply that house count by 3, 4 times. So now you're talking about an eviction every other like week and some kind of big catastrophe every few days.
Hmm.
And that was kind of where I was like, there has to be something, better than that. So what does like a logical thinking engineer do? It's like, well, let's go buy multifamily because it's multiple, right? And then you hear all these like, people say, oh, multiple roofs, diversifying, your income streams. And it's all true to some extent, but it didn't really come alive until I met other real accredited investors, kind of like yourself, right? Like guys like us who had kind of done some things on our own and all kind of coming to the same conclusion that, yeah, single family homes are cool for broke guys getting started and flipping houses, but it's you kind of hit a point that it's not scalable.
Yeah, yeah, and that's kind of where our journey converged. I had joined a multifamily investment group, and I know you had joined the multifamily investment group. And that transition, so you're doing the single family, and then you're like, this is not very scalable. You're still working your job. You got this turnkey, but you're still working. So then you get into the multifamily space. How did that change everything for you?
I mean, I kind of thought for a while that I would do both at the same time. But I think what pushed me over the edge was when you're a passive investor, the debt doesn't get put in your name. So although I was fine with that and used to with that, I knew
Hmm.
long term I didn't want to do that. The big thing was the liability, right? When you're a passive investor, you're not really the one getting sued directly, like when you have these little single family homes. And when your net worth gets to be over $1 million, that becomes a bigger thing that you focus in on. But the biggest thing was like, hey, I kind of found a tribe of other high net worth folks, right? Like I think you and I were maybe a little bit on the younger side, right? A lot of these guys were engineers, doctors that were already in their 50s and 60s. And I
Okay.
looked around the room and I was like, yeah, this is the pedigree that I think I should follow. These guys have been investing in rentals for over a decade. And I know to me, success leaves clues. I'm going to follow people who have what I want. And a lot of these guys were trading in their little rental properties and jumping into these larger syndicated deals where you had an asset management general partner operating the deal. And the way I saw it, it was like me moving away from my buy, hope, and pray strategy into more of a forced appreciation, take your own fate in your own hands strategy.
So you decided that it was time for you to level up your game. What were your limiting beliefs like at that point? I mean, what was your hesitation? Because I know that it can be hard going from I've never done this and getting into your first deal. Do you remember that? Do you remember having those challenges or any of those roadblocks?
I think I kind of gracefully moved into it. Like initially, I just wanted to be a passive investor, and I jumped into some deals, and it's real hit and miss when you first start out because when you're a new investor, your deal flow is horrible. You just have like these new operators that haven't done anything,
Hmm.
and you have some beers with them, and you meet them at a conference or you meet them at a meetup, and I mean, you seem to get along, but it's really, really hard to tell who's legit out there, right?
Yeah.
I mean, most people don't really make it when they're starting out or past like the 1.5, 2 year mark. Just a kind of a game of attrition. And that was kind of where, you know, the way I do things, like I'll test things out. I did, $50,000 investment here, there, and I tested it out. And part of my initially it was not a good experience. And I was like, these guys are idiots, right? Like, let's be honest. Like, we had some people who like I mean, maybe I shouldn't say, but like, they weren't professionally trained. They did not work for like a Fortune 500 company. And
Hmm.
and for
Hmm.
people listening, and notice I'm being careful with my words, right? Not necessarily saying they're college educated or not, but you just couldn't really tell who was legit. And I kind of got to a point where it's like, well, I was wavering. Should I just do the single family home thing? Or I was in a way I was kind of forced to like, well, let me just be a general partner so I can be on the inside and a little bit closer to the action. So that was kind of what forced me down that path because I think when you and I kind of interacting, I was still in the headspace of like, yeah, this is great. I'm learning how to analyze deals, underwrite properties. My biggest problem was I was never able to like kiss the bus of brokers and get the deals, right? It was just fine, right? I was just a
Yeah.
passive investor, just
Hmm.
looking at,
Hmm.
deals that were being done out there.
So I want to hit on that spot. So at this point, you're no longer in Seattle. You're in Hawaii. Um, I believe if I'm following the timeline correctly. And but I remember watching you and you're in it and you're getting deals and you're getting other deals and you started the Hui pipeline, is that right?
Yeah,
Is
I mean, so I started to do that
the
all
Hui
while
deal
living in
pipeline, is that
Seattle.
correct?
Yeah, it was kind of my fun little investor club that
Uh-huh.
I kind
Uh-huh.
of created back then. But I was still, living in Seattle and then traveling a lot.
Okay.
It wasn't until I was like, maybe at least 5 deals in that I was like, um, is- I mean, sure, people talk about this a lot of times, right? You start to create your ideal lifestyle. And for me, it was like, Seattle's just too cold. I was there for way too long and I wanted to, move back home.
Okay.
Although I should have, you know, the hard thing is like when you're a general partner, you need all the money you can get for earnest money and investments. But, I mean, I had been investing for like 2009 to like almost a decade prior to that in a good market. And I had enough where I could take a pay cut, live in Hawaii. I mean, Hawaii is not that expensive if you're from there and you kind of know how to survive. Um, the
So
only problem is it's a little bit longer plane trip, right, to the action.
yeah. So, and that's really where I'm going with it is, I live in California. I don't invest in California. Do you invest in Hawaii? Do you have any
Oh,
multifamily
heavens, no,
properties?
it's just like a primary market like California. Too many rich
Yeah.
people driving prices up.
Yeah, it's very expensive. So, um, you know, there's a lot of people who are in the space and I'm one of them who I have underwritten a lot of deals. One of and I would say I'm fairly proficient at underwriting deals, but to your point, Lane, I'm not having dinner, I'm not breaking bread with brokers. And that is something that I didn't realize the value of that at first. It took me a long time to realize that. So my journey has, been kind of exploring where do I add the most value to other partners, finding those partners. Um, so how have you been able to have your level of success and be not necessarily the boots on the ground guy? Like, how did you find your role? What is it you're doing, and what was that journey like to get there?
Well, part of it is like not wasting my time eating with brokers, right? If that's not my thing.
Mm-hmm.
There are 3 things in this business that you have to do to be a general partner, which is operate the deal, find the deal, or find the money. I, I mean, I know people like fantasy football or fantasy basketball roto style, but it's like, look, if your team doesn't have a bunch of guards and can't get the steals, screw it, right? Just go and get the points somewhere else. And
Gotcha.
I think I talked to a lot of like new operators and sponsors out there, and I tell them like, what do you think you are, Bo Jackson? You think you can do
Mm-hmm.
multiple
Mm-hmm.
things
Mm-hmm.
here, And most people think that they can, but the smart ones think you can't do both, right? Like you can't do out of those 3 things I mentioned, you can't really do 2 out of the 3. You have to, you got to focus on one.
Would you
I
would you say that each of those really is a job? It's its own job, and if you're trying to do all three of those, you're trying to do three jobs. If you're enjoying the podcast and want to fast track your way to becoming a full time real estate entrepreneur, then join the Multifamily Mastery Hub on School. You'll get access to our educational course library, live trainings, live interviews, and a community dedicated to helping you succeed. Visit school.com/multifamily mastery hub. That's SKOOL.com/multifamily mastery hub and fast track your way to becoming a full time real estate entrepreneur today.
Yeah, but I mean, logically, it's hard to do that, right? Do what's actually necessary because if you're going to specialize in something, you're going to need a partner. And I think a lot of new people starting out, partnering up prematurely usually leads to battles in the down the road, as you and I have kind of seen a lot of people break apart
Hmm.
and just dysfunctional partnerships out there. But if you're kind of reading the writing on the wall that we're throwing down here, or at least I'm saying, you have to partner up and each of you specialize in one or two of those things. I think the other part comes from, I'm not saying there's a lack of confidence, but in a way, it's like some people, they don't want to put their flag in the stand and say, I'm going to just kiss a bunch of brokers' butt and find the deals. Because if they fail on that one thing, they've they've put their flag in the ground and they failed on it. Everybody
Hmm.
knows it,
Yeah. Yeah.
right? So they're like, "Oh, I'm just gonna do it all. I'm just gonna do it all." Right? So when they eventually fail at finding deals, they say, "Oh, I was doing other things. I wasn't applying myself." You know. And
Yeah, yeah, that's a very, very interesting perspective. Well, the reason why is because of yeah, these other things. So, but I agree with you 100%, Lane. Like 100%. It's find your swim lane and stick to it and master it, and then find those partners who will complement you. Um, what is your advice to people how to find of those three pillars, find the one that they should uh, stay in that swim lane?
I think in the beginning, I mean, do what I say, not what I do. In the beginning, most people are going to need to do all of them. And I think part of that is finding which one you're actually good at, right? It's very rare somebody saying like, "Oh, I'm good at doing deals or operating or finding money," and you're actually good at it. Like very little few people have that insightfulness or that self-awareness.
You have kids now, Lane?
Yeah,
So
yeah,
it's kind of like with your kids, you're like, well, I just need you to go try this. I need you to go try that. I need to go try that. And so that's something I share with my kids is I just want you to try it. You don't know if you like it or not until you try it, right? You don't know if you're
yeah,
gonna be good at it until you try it. You've got to get out
yeah.
there and take a few
Yeah,
swings at
say,
it. Yeah.
yeah, you're exactly right. I mean, certain things like my daughter's not going to play basketball. Let's be honest,
Yeah,
right?
yeah,
Like
yeah.
that ain't going to happen. Little like 5-footed under Asian girl, like that's not going to happen. And if you like to bring this back into this conversation here, like if you're a total recluse and your English is broken, you're probably not going to be able to raise capital and communicate ideas, like and influence people. Let's be honest. Um, but you see it. You see some of the most awkward people try and do podcasts and like, it's just okay, whatever. Good luck to you, sir. But like, I mean, that's where I think mentors or peers can help guide you into the right place. But you got to be willing to listen. Well, I mean, I was like, I'm in an angel group and we look at pitches and in this angel group, people are generally pretty helpful to the young entrepreneurs
Hmm.
and it was some kind of like B2B um very obscure product, right? Tech product. And then the guy was just like totally like not like unaware of the way he came across the audience. And then the group, which were potential investors, like we got to help this guy out. This guy needs a CEO to communicate these ideas, right? Like, and that may be people out there. Like I mean, part of it might be not what you're good at, but what do you suck at and what do you not like? Maybe that's going to start to build this affinity to which side of this triangle you go towards.
Yeah, yeah, good point. So then here's the flip side of that is what's your advice to go find those right partners? Because you mentioned a lot of it happens. You're at a networking event and you have a couple of beers, maybe a couple of drinks. You're like, oh, that person seems cool. But you and I both know it's really like you're getting into a marriage. And if those people don't show up, and I've had that happen before where someone just like vanishes, you're left holding the bag. You've
I
still got a commitment, you still got a job to do, you still got investors' money, you've got to fill those gaps. So, what advice do you have for someone who's looking for those partners?
Yeah, number one is not going to be perfect. I mean, when you're on these like lower level getting started operator runs, it's a shit show. Like it's amazing, like especially in the early days, you give a job to somebody in the GP and they just like, I'm like, how did you even get here today on this plane? How did you plan your trip? You can't even execute simple
Yeah.
things, right? And but yeah, you don't like to your point, you don't know, right? But that's what you're gonna run into. At least speaking for myself, like just from my experience, um, I don't know what advice I can give people other than my experience shares. That's just how I do business. And my experience was like I kind of got thrown into this kind of like Gulliver's Travels, kind of like a hodgepodge group. And there was a lot of us. And don't get me started on cooks in the kitchen. You can't
Hmm.
get decisions made with, unexperienced people. It's like it's hard. But from these, I realized who the heck had a brain and who could execute, and I was able to look at the other side of the virtual table and be like, hey, Steven, like, hey, you and I are the only guys doing something around here and have some any logic. How about you and I work on the next deal together and let's lose these guys right here? And that's
Yeah.
how it kind of happened for me over time.
Yeah, there's an organic part of it, and there's a true struggle that happens when you're first getting started because you don't know what you don't know. You're so much of it is you don't know what you don't know, and that even includes
Yeah.
the your partners.
And I still run
On
into this myself. Like, there's no way you can like protect against like you don't know how people are until you get into bed with them. Maybe it's like dating and marriages. You don't know until
Yeah,
you hit adversity. I would say to mitigate the worst of it is like just make sure you do a background check, that type of stuff, criminal, but just know eyes wide open that it's going to be kind of trial by error. But when you find good people that you get along with, good value alignment, and there's good energy, hold on to those guys.
yeah, yeah, absolutely. I mean, I'm glad to hear you say that because it's not. I don't want to paint the picture that it's all bad. Because I've also, to your point, met some people who are like, I would go to battle with those guys all day long. Like they show up, they're always looking for creative ways to solve whatever problems in front of them. Hey, this role is not working for you, and there's a very open conversation. Hey, I'm not doing a good job. You want to try? And like, there's those conversations where you're finding people that you have those really good relationships with. So I echo what you're saying. Is there'll be some challenges. For the most part, everybody's trying to do a good job. There's some people who, like you said, how did you even make it here today?
Yeah.
Yeah.
Yeah. I mean, and the fact that they have these like very structured programs kind of makes it possible for people who should not be in this business get into the business.
Yeah, yeah, it could be very easy to get people into the business, or into this business. I want to change topics just a little bit. I want to go into capital raising. Lane, one of the things I remember watching about you and learning from you is when you started, your group. I asked you the question, kind of what's your angle, and maybe that wasn't the right way to ask the question, but you went into it with a lens from raising capital of you're thinking more of like a, I mean, these are my words, not yours. You can correct me, but more like a financial advisor. And I was looking at your page here a little while ago, and you've
Oh,
got
I don't do any financial advising, that's for sure. No tax or
so
legal advice here. You got to be an idiot to follow a guy on the internet. But
yes, but
it was
you've
certainly
got
more of like a follow my story, right? Like I said earlier, experience share. I mean, I start like my secret to success is I started a podcast at the right time when nobody
mhm,
was making it, and I was just lucky. But part of that luck was like I put out there a raw and authentic, lessons. But at that time, I was buying single family homes across the
mhm,
country, and then I gracefully kind of started to into the stages. I was very careful not to really talk about buying apartments until I was kind of confident and coming out of that first, second, third stage of learning.
mhm, mhm,
But I think that's resonated with people, right? They could see the genesis. I mean, now over like 400 something, 468 podcasts. Like, I mean, to me, I mean, look, I mean, it's not for everybody, but to me, I want to see somebody do the ups and downs,
mhm.
authentic reality, as opposed to somebody who has a nice website who just might have popped up in the last 6 months. You'd have no. no background.
And maybe that's more the angle looking back at it is, you're being authentic and this is my journey. These are the things I'm learning and this is what I'm sharing with people. Um, and I think that's, from the outsider perspective looking in, I think that's worked out very well for you. And even for myself, I'm learning this right now is just like, when it comes to raising capital, not necessarily beating you have to invest in apartments. You've got to invest in apartments. You've got to invest in apartments because people don't walk around saying, you know what I need to do? I need to invest in apartments. Like people don't walk around saying that, especially they don't know that. But all people will be thinking, I need to accelerate the amount of money I'm putting into my retirement, or I need more tax strategies there. So, this is one of the things that, like I said, I've watched you do, and I think it's part of your journey is you've just rolled up your sleeves and you've learned those things and you've shared them along the way, with the goal of impacting other people and helping them. Right. I mean, that's really when I
Yeah.
think of Lane, that's what I think of someone who's like gone through these lessons and has been a helpful person and trying to help people work through those things.
Yeah. And not necessarily like multifamily. I think multifamily is a big part of my personal portfolio, but as a now I'm learning, like there are things outside of real estate to invest in. And this genesis happens. I mean, no different than in 2009 when I realized that buying properties in California or Seattle didn't make sense. And I went out of state. And when I transitioned in 2016 from single family homes into multifamily syndications, I mean, I my secret is I just get around folks like yourself and I just kind of copy a little bit of what everybody does. And out of when you're around in an ecosystem, there's always going to be a few people who are the early adopters that try something a little bit different and you watch them and you take some of those lessons learned. If not, you're the trailblazer. I mean, I'm a bit of a trailblazer myself too. I think that's where the influence on the podcast comes, but I mean, I'm always kind of looking what are the people on that next million,
Mhm.
in like my book, I kind of define it as like, you're on the second floor of the wealth elevator when your net worth is like 1 million to $3 million. And then the third level is 3 million to five, right? Because that's around end game, what I call end game. You should be able to be financially free at that point, at net worth level.
Mhm.
But what do people do when they've hit the penthouse level? When they technically don't even need to invest and they can just do T-bills or infinite banking at that point. Like, what are they doing? How do they're like, what's their mindset? Like, you're never gonna see what people's asset allocation mix. That's just too private. Although in some of these meetings you and I would go to, it's funny, people would wear there's like their name and then they're like, my name is like Carol and I have $4 million and half of it's in my I mean, that would kind of got me. I'm like, oh, too much information, or like, but what's your social security number too,
Yeah.
lady, right? Like,
Yeah.
but like, um, you're never gonna get the full picture, right? But you always get part of like the sphere, and you just take these bunch of data points and you try and emulate it yourself.
Awesome. Hey, I'm now going to put you in the hot seat. Okay, you ready? You ready for the hot seat question? Who's
Yeah,
gonna win? Who's
yeah.
gonna win the election? No, I'm not gonna make you predict that. But how do you think the election will possibly impact the future of apartment investing? You've got very opposing worldviews, I would say, in this election. I mean, that happens most elections, but what's giving you heartburn about the upcoming election?
I mean, I'm one to like not really get caught up in elections. I don't think it really matters at the end of the day. It's always like the people who put it in motion 4 to 8 years ago is the ultimate, people to think that one person can change the course of a nation and world economy is, it's not that impactful, I think. But if you kind of force my hand, like I do think that like Democrats are a little bit more into letting immigrants in. I
Hmm.
do think that that helps the multifamily workforce housing sector that I like. Like the richer getting richer, the poor getting poorer. It's this middle class going to the lower middle class that need this housing more. And a lot of the immigrants are some of the best, tenants, right? Very family oriented. Um, I am somewhat interested in the EB5 program, so that has some influence on it. On the other hand,
what is the EB5?
I don't know if maybe I butchered it, but it's the, rich people from other countries can buy their way into the United States by
Oh,
sponsoring and investing in certain projects up
gotcha.
there.
Yeah, I don't know really anything about that, but that's interesting.
Yeah. So, um, but on the other end, I think Trump guys, they are a little bit more into like the bonus depreciation, possibly bringing that back. But other than that, I don't know, I'm not
Not
losing
overly
sleep one way
concerned
or the
about it
other.
because people still need a roof over their head. They still got to go to work. They still have to have a job. They're going to be moving where there are jobs. There's always a housing shortage. Multifamily's in a pretty good spot, is what I hear you saying. You're not overly concerned about what happens in this election or the next or the next or the next.
Yeah, I mean, you try and invest in things that have like a 10-year time horizon, and you try and not worry about like the things that are happening this year, next year. Like right now, high supply, hyper supply in some of these markets because there was a lot of building from free money that'll burn off in the next year or two, I mean, but like you said, long term, things look good. Don't know how things will change 10, 20 years from now. Don't know if Americans' population will start to decline like China and India in the long term, but
Mm-hmm.
you know, maybe that's kind of my short-term thinking in a way is like, let's just get ours and let's just go to a T-bill and chill and get a bunch of life insurance and just relax. Get
And then
yourself as quickly as
hang
you
out
can to
on
four
an
or five
island
mil.
somewhere, right, Lane? Is that the you've already got that part of the lifestyle checked off. You're just getting to the T bills and life co.
Yeah. Yeah. I mean, I've kind of created more of a business, so I kind of have to force to do this. And I would probably just, become an alcoholic and play Call of Duty or something. I don't do any of those, but like, I don't know what I would do with myself, right? But if I
Yeah.
had somebody asked me the other day if you had like a perfect life, I was like, well, I would like to have $10 million cash, and I would like to have some kind of anonymous business where nobody knew who I was and I'd had no employees and I could just solve moderate difficulty entrepreneur problems and I'd be a happy clam.
Yeah. Yeah, that sounds like a pretty good deal. So, my I was gonna ask you, so what's next for you? But you answered that for me already. That's really your game plan there.
Yeah, what's next for me? We have to redeem. Like this is like part two of Avengers right now. We got our asses kicked to us.
Are we in the end
20
game?
I guess so. I mean, I'm not saying that Captain America is going to wield Mjolnir anytime soon, but like prices came down 20 to 30%. And the bases are like nice and juicy. I mean, I just saw a deal the other day where it penciled at like 2.2, 2.4 debt service coverage ratio.
Wow.
If you don't know what debt service coverage ratio, you need to know what the heck that means because that's the safety margin within your operating cash flow. I mean, I remember like back in the day, like when people would get their laptops out in the bar, look at deals. Back then, we're talking like 2016 to 2020. Man, we get super excited when you see something 1.6 from a general partner standpoint. For
And you said you're at
context, you need
2.25. Is that what you said? The deal you
yeah,
looked at the other
because
day?
like the
Yeah.
prices are it's not that these are great deals per se.
Yeah.
It's the same deals that it was. But yeah, when your prices are that much cheaper and the loan to value is less, that's going to happen. I'm just do the math at home with some fake numbers, guys. Like
Yeah.
that's how it works.
Yeah, no, that's I actually underwrote a deal earlier and I am going back to double check because I'm like, is that right? Just because the like you said, the DSCR was much higher than I was thinking. The returns were much higher. I'm like, is that right? So I got to go back and double check some things. But yeah, I mean that's what I've seen too is the 25 to 30%, 35%. I mean, the deal we just closed on last week was 25% below what it was purchased for in
Yeah.
2022. That's just
So what was, I mean, like what was like the first, well, I mean, maybe answer it like this because we can't talk about deals per se, right?
yeah.
But like 2020 to 2023, well, if you you're underwriting a lot of deals, right? And then like what number pops up on debt service coverage ratio? You're like, oh, let's take a look at this again. That made you excited.
Man,
Like
I was struggling to get to 1.25. I was like,
yeah,
I'm like, wait, I gotta like, how do I get it to up to 1.25?
yeah,
Honestly, that's where I was at around that time frame was like, man, like I can't even get to 1.25 as a minimum, like, without trying to bring down the offer price or like that was a challenge at that point.
yeah.
So
If you saw 1.6, you're probably like, all right, I've probably been doing this a little bit too long. I'm gonna go have some dinner and come back
yes.
and underwrite this deal. I probably missed
There's something
something.
wrong. Yeah, there's something wrong.
Yeah,
Like, yeah, yes. That's what I
yeah,
was saying. 1 point, yes. So because everything was like you're struggling to come in right at 1.25, which was, basically the lender requirement at that point. Like, how do I get it there? How do I get it there?
yeah,
Talking with your lender broker of like, well, what are my loan options to squeeze it in? Can we look at is there anything here you look in the T1 or the T3 to get that done? Um,
yeah.
well,
But think about it, guys. Like if your debt service goes down by half and because the loan to value is lower, there you go. That turns your 1.0 into 2, right?
yeah. 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 So Lane, it sounds like you're very optimistic. I mean, we're licking our wounds of what's happened over the last couple years. Learned a lot of lessons, but sounds like overall you're pretty optimistic about the market right now and staying in and keeping focused on your long-term goals.
Yeah, I mean, I think it's tough, right? A lot of investors, including myself, we lost a lot of money. Um, I think that's at the end of the day, you got to diversify over 4 to 7 years, right? Because you never know when a market correction is going to happen. It will happen. In fact, every 7 to 12 years, it will happen. So the idea is to not stay stagnant and make some hay in the meantime. So when it does happen, you're up, you're up in the scoreboard, and you're only, 1/7 or 1/10 of your portfolio is exposed to that.
Yeah. Yeah. Great advice. Lane, thank you so much for taking the time to join me today. It's great getting caught up with you. I know we haven't had a chance to chat in a while. We'll have to do this sooner rather than later, even if it's not over a webcast. But really, I appreciate you taking the time to hop on today.
Yeah, thanks for having
Lane,
me.
what is the best way for people to get a hold of you?
They can shoot an email, Lane at thewealthelevator.com, and then check out my new book for those people who kind of want to size them up themselves with other more accredited investors. We have a cool chart in there to you know, kind of show the steps, right, that I've kind of seen going on this wealth building journey myself. There's not really books out there written for, the non-CC Orman, Dave Ramsey, even the Rich Dad Poor Dad guys. A lot of those guys are just wholesalers and flippers, right? But, taking a more high level approach on like, the stages of wealth building. And, I think part of it for me is, multifamily real estate, syndications, and now private equities is a way of getting alpha outside of Wall Street.
Awesome. So, and if somebody wanted to connect with you and potentially invest with you, get a hold of you the same way?
Yeah, check out my podcast and check out the book. And then, yeah, shoot me an email, Lane at thewealthelevator.com.
Great. Lane, thanks so much for joining. I'm Stephen Lee Thomas. Have a great day. Thanks for tuning in to the Stephen Lee Thomas Show today. And if you found value in today's episode, then I have a favor to ask you. Please share it with friends, family, and anyone who might benefit from the insights we shared today. Also, don't forget to subscribe and leave a review if you enjoyed the show. And if you aren't already part of our school community, then head on over to school.com/multifamily mastery hub and join today. And again, thanks for tuning in, and I look forward to connecting with you in our school community.